Hello, this is Brian Resney, President of Resney Wealth Management, bringing you an important update about the economy and the investment markets. You know, we're almost halfway through the year. Equity markets has sold off the S&P 500 approximately 15%, 15% year to date. The technology sector almost double that. The Dow, very similar to the S&P on the downside. Long-term treasuries, about 16%, 17%, so actually more than what the equity market has actually gone down. What's interesting, and again, I talk about this, at least I try to every time I do an update video, at least certain times a year, but I always like to explain to every client that volatility, again, is normal. Nobody likes it. Bonds go down in value, real estate goes down in value temporarily, equities go down. You know, the problem that I think most investors face is when things are up 20% last year, nobody's nervous. But if things go down 15%, then the world's coming to an end. Remember, sometimes you go up, sometimes you go down, but if you look at the next 3 years or longer, you're ultimately going to be a happy investor. Now let me explain how we look at things as an investment manager. If we need to make adjustments, we certainly will. Did we feel that we would get this kind of pullback this year? We thought we'd get at least a 10 to 12% pullback. And again, that doesn't mean we're not going to recoup that pullback sometime this year and potentially go to new high ground, or maybe we end the year negative 15%. But I firmly think in the next 3 years, you're going to be very happy investors. 3 years is a long time. You're a long-term investor. I don't care if you're 82, if you're 92, if you're 22. You're a long-term investor, let me explain. If you're 82 years of age and you have $1 million portfolio and you're living on income, you're taking money out of that portfolio every single month, are you going to spend all of your $1 million in the next 3 years? Of course not. So the majority of that $1 million, let's say 90% of it, is going to be around to basically grow and recoup and go to new high ground over the next 3 years. You're only taking out a portion of your money in the next 3 years. So again, whether you're 82, 92, or 22, every investor, unless you're going to liquidate that portfolio in the next 3 years and spend every single penny of it, which I have no clients like that, and most people would never do that, you're a long-term investor. So we look at the next 3 years, we look at a rosy picture. Again, volatility is normal. The bond market, of course, is actually doing quite a bit worse than a lot of the equity markets around the world. And this is something I've talked about a number of times, that again, bonds go down even though they're considered a safe investment. They're down more than equities depending on the maturity level and the type of bonds you own for this year. Kind of an interesting phenomenon. But again, things do come back and things will recoup and we will go to new high ground. The media, unfortunately, is a bad culprit when it comes to emotions. And people will read things on the internet, imminent recession coming, world coming to an end, 80% correction in all markets. Factually, not true. But if you hype things a lot, that sells advertising, people watch. The media companies make more money. Again, I've talked about this a number of times. Nobody likes volatility. Nobody likes their $1 million going down 15% or 5% or 25%. Nobody likes it. And I totally understand that. But we are not going to make emotional decisions as a money manager. And sometimes we have to accept some of this extra volatility as we go through this transition phase where the Fed has taken their foot off the gas pedal, essentially, raised rates to some extent, and I think we're going to see at least a 50 basis point increase as we get into the June month, and potentially another 50 in July. My gut reaction, though, is we're not going to see. If we see more than the next 50, I'll be kind of shocked because the economy is already actually slowing down off its lofty growth levels from the extra stimulus put in by the government. So again, that's slowing down. That'll bring down some of that inflation. Again, supply chains are starting to get fixed, and we're seeing some of that, so that'll bring down some of the inflation. But one of the things I want to stress is this. We're going to have a little bit higher inflation, probably at least in the 3%, 3.5% range easily the next 2.5 to 3 years because of the current administration war on fossil fuels. And I've talked about this before, whether you're Democrat, Republican, again, price stability matters, and when you're not energy independent anymore, prices have gone up. I know there's a lot of blame that Russia did it. Russia's got nothing to do with high oil prices, to be brutally honest. They were already up, 60-80% before really Russia invaded Ukraine. So at the end of the day, policy does matter. Plan on spending $5 a gas for at least the next 3 years until there's a new administration in place that hopefully will come back and say, hey, maybe we should be all facets of energy and become energy independent. But with that, there's opportunity. Equity markets can do quite well. Of course, we do still own oil. And with bonds and interest rates already moved up and kind of already factored in the price of bonds, we actually are looking at potentially moving our duration a little bit further out on the bond side of our client portfolios, because I think ultimately in the next 2 or 3 years, we actually might see the Fed reverse course again and actually start reducing rates potentially. So these are all things we look at. But again, daily research, not making knee-jerk reactions, doing the things that really need to be done, and sometimes doing nothing because you already own what's appropriate is the right thing to do. If you're a client of the firm, of course, and you have any questions or concerns, please call the office. Love to talk to you. Whether you want to talk to myself or the staff, that's great. Whether we need to do a phone review, an office review, we are here to make sure our clients are always well communicated to and that your portfolio is properly managed. We appreciate your business, your trust, and your referrals. Keep us in mind if you talk to friends and family members, and make sure you have a safe and profitable day.